We are now past day 37 of the government shutdown, and the effects are really starting to show. And because agencies like the Bureau of Labor Statistics are closed, we're not getting the usual jobs report, and without that info, the Fed's flying blind, so no new numbers basically means there's no justification for another rate cut in December, which isn't great news for rates in the short term, and the likelihood of that cut is dropping. But the shutdown's also causing mandatory flight reductions, fewer planes in the air, and tens of thousands of workers are missing paychecks. We did get, and obviously the SNAP benefit, which is terrible, but we did also get some alternative labor numbers this week from a private firm that's called Revelio, and they basically analyze over 100 million online job profiles, and that covers about 2/3 of the labor force, and their numbers showed about 9,000 job losses in October, and that's after revising the previous month even lower. And that does kind of line up with what we've been seeing as far as weak job growth and more layoffs, especially with the announcements we've seen from large employers like Amazon, Meta, and Microsoft. But what's interesting is that the ADP report earlier in the week came out better than estimates, but was still weak. And those numbers do probably better represent what's actually going on, just because of sample size. But either one you look at shows weakness in the labor market, which should help mortgage rates. And job openings are also dropping. Indeed reported that the lowest number of postings since early 2021, which is just another sign that the labor market's cooled off. Despite all that, a few Fed members are still hanging their hat on a solid labor market and saying inflation's too high, which doesn't make sense either because, when you strip out temporary tariff effects and the overstatement that comes from the shelter numbers, we're really basically already at the Fed's target. I feel like I say that every week. But even New York's Fed president admitted this week that the Fed isn't as restrictive as he thought and said there's room to cut before hitting neutral, and obviously happy to hear that. It shows he wants another cut. And basically what all this means is that right now mortgage rates are kind of moving sideways, and we're just kind of waiting for some clarity in these reports that we haven't gotten anyways. But the Fed wants more numbers before making another move. That the longer that this shutdown drags on, the longer it's going to take for us to get those reports. But I hope you have a great weekend, and I'll see you next Friday for an update.